start off with stocks climbing today, all 11 S&P sectors finishing in the green, but there could be a big risk to the rally bubbling up. Check out what happened to Chinese tech stocks today as Congress seems to be turning up the heat on China. Let's get to Kayla Tausche with all the details. Kayla.
Melissa, the Holding Foreign Companies Accountable Act technically applies to any non-U.S. company that is listed here. It requires those companies to be subjected to an audit by a division of the Securities and Exchange Commission, and if not, to certify that it is not owned or controlled by a foreign government. Any company that cannot prove that would be dislisted. Here's John Kennedy, the Republican senator from Louisiana, who sponsored this bill.
I do not want to get into a new Cold War. All I want, and I think all the rest of us want, is for China to play by the rules.
Anti-China sentiment has been gaining steam in recent years. It did not subside even after that Phase 1 trade deal was reached in January. And this particular issue of transparency has gained new momentum after the fraudulent financial disclosures at Luckin Coffee just last month. And earlier this month, the White House and the Labor Department directed a board that invests retirement money on behalf of federal employees to refrain from investing money in certain indexes that have Chinese stocks in them, calling that a matter of national security. And Melissa, as for this particular bill, it still requires passage in the House and a signature from the president to become law. And given that it was first introduced early in 2019, it's unclear exactly what the time frame for that is, but it's clear there's a lot of bipartisan support. Melissa?
Kayla, thank you. Kayla Tausche in Washington. Well, J.P. Morgan's Mark Kolanovich writing today, as the virus risk is abating globally, political/geopolitical fallout is emerging as a new risk. And specifically, this is what he writes. For example, just today, the U.S. Senate passed a bill to bar Chinese companies from being listed on U.S. exchanges. So more widely, while we have been recognizing China-U.S. tensions as a political stumbling block for the markets here, J.P. Morgan is coming out saying this could be a real issue. Tim, I go to you. In terms of the trade that we saw in Chinese internet stocks, can you walk us through why some got hit harder than others? Alibaba, for instance, emerged relatively unscathed compared to JD or Baidu.
Yeah, because I think if you look at the disclosure and the approach that Alibaba has taken to their international accounting standards, I think they're different. And I think Alibaba, which traded down on the news, ended up rallying back almost 3% off of those intraday lows. Alibaba reports fiscal Q4 later this week, I think on Friday. And I think those numbers are going to be really solid. I think this theme may appear to be a trade war theme kind of hangover. But I think this theme is something that's been front and center for a long time. I think the SEC's ability to actually investigate Chinese companies listed in the United States and actually look at their balance sheets and get follow-through from the Chinese government and from these companies themselves has been a challenging issue for them for a long time. The Nasdaq, we saw, is actually putting more restrictions on Chinese companies going to IPO in the U.S. and actually limiting a minimum size, for example, which will actually also, I think, bring more credible and just entities that actually have more scale. So I think separating the haves from the have-nots here is not terribly easy. But I do think with companies like Alibaba and Tencent, I think the standards there, these are companies that went on global roadshows, but certainly Alibaba for a long time and were basically put through the ringer by investors and lawyers and compliance folks to actually deliver a platform that actually stood up to this type of rigor. What the U.S. is asking for is what the U.S. effectively asked for from every company. And therefore, I think this is very important, and I think it's something that will continue.
This is, in theory, very good for U.S. investors, right? I mean, Congress wants and the Nasdaq wants listed companies from other countries to follow U.S. accounting rules. Better for U.S. investors, better for transparency. And yet, in the context of the world we live in, Guy Adami, this is going to be seen as the latest bar being trade between U.S. and China, the U.S. and China.
Yeah, and with that said, here we are with the S&P 500, basically 3,000, 12% off its all-time high that we saw in February. The Nasdaq's within a whisper of an all-time high. You have a bunch of stocks that we'll talk about making new all-time highs, and nobody seems to care. And to your point, yeah, listen, everything going on with China, maybe it's deserved. Maybe we needed to have those trade talks. Maybe the Chinese had been ripping us off for years. I'm not disputing any of that. What I've been saying, though, is there has to be ramifications. And now, with this latest, I think it's a big deal, coupled with the fact that, you know, this administration, rightly or wrongly, is looking for a scapegoat for the coronavirus, and it's going to be the Chinese. There are ramifications for that. And if we want to bring everything back to the United States, again, wonderful. There are ramifications for that. So the fact that the market doesn't seem to care in terms of basically the S&P 500, the Nasdaq, is very interesting to me. I understand the Fed. I get all that. But we're looking past something that could be extraordinarily destructive in the months to come.
Karen, what do you make of this latest development in the context of what we've seen in the markets today, which is a rally?
Right. Well, I actually do own Alibaba, so I was a little bit concerned when I saw that, and I thought, oh, Alibaba is safe. You know, as Tim said, they went through a very vigorous process, but I did want to check that they do have a world-class auditor, just to be sure, which they do, Pricewaterhouse. So ultimately, I think it's a good thing. I think, though, if it happens, I mean, I was surprised it was unanimous in the Senate. If this actually comes to pass, in the short term, it's going to be a bad thing for some of those stocks, obviously. But I agree with Guy also. I think it's just increasing the tensions so, you know, that China becomes the bad guy. And as he said, I think they're looking for a scapegoat. All that having been said, though, I'm very surprised the market went up as strongly as it did today on I don't know what. I don't know why it went up.
Dan Nathan, is it a coincidence that we saw fresh highs in a lot of the U.S. internet stocks while we saw this sell-off in Chinese internet stocks? Or is that just two things that happened to happen on the same day?
I think they happen on the same day. I think it's pretty interesting that, you know, when you think about the U.S. internet stocks, how little exposure that most of them have in China because of regulation. And I think that this is one move by the SEC and by our exchanges here that is going to get very, very little pushback. If anything, the Chinese companies that want to list here for a whole host of reasons, you know, they should face the same scrutiny that U.S. companies do. But I can't help but just, you know, kind of string it all together a little bit with some of the stuff that all the other guys and gals are saying about this timing. I mean, listen, we are clearly making a stronger case against China, whatever the reasons are. I think that is bipartisan. I think there's a lot of people feel like we should take them on a lot of different things. I guess my bigger issue right now is about the global economy, the pace of the recovery. China's recovery is going to be really, really slow. And when you think about this economy that's going to go from 6% GDP growth to negative in just such a short period of time, and what that's going to take to get back up to even high single digits, that is going to be a weight on the neck of the global economy for some time. You know, I just feel like that we need to figure out how to better cooperate globally, because deglobalization, the biggest theme of the last 20 years, is coming undone, and there's going to be massive, massive economic ramifications for that. And I think that U.S. companies have dramatically benefited from globalization, and I think just the market is not discounting any disruption to supply chains and deglobalization right now.
So the reshoring move, a reshoring move could in fact hurt S&P 500 companies. Tim, I mean, would you agree? Because that it does look like we are moving slowly towards that eventual end. If we're talking about bringing back critical components for defense products or for technology or for drugs back to the United States, that's at a cost, obviously.
Yeah, look, I don't know how great this is going to be for Apple. I mean, this is something we've debated over and over, and in terms of their supply chain and the component makers, and yes, some of this can be done, but I think it's crazy to expect it all to happen, and I think it would be terribly inefficient. So let me stand on the side of saying, yeah, I get the fact that we want to control supply chains. I get the fact that I stand in line with people that want to push back on China on a number of issues, not categorically. But I think this is easier said than done, which I believe is what Dan is talking about. I just think that, you know, let's just the key focus for me is that U.S. markets are the deepest, most transparent in the world, and they are for a reason. That there is regulatory infrastructure around the way our markets trade, the way companies have to be accountable, disclosure, transparency. This is ultimately good for Chinese companies if they can list in this environment. And I think any company in the world sees that environment and says, this is the place where really I will exact the greatest multiple. Those that don't want to play ball here clearly can't and won't. And, there have been some high-profile IPOs in the last year. Obviously, Saudi Aramco, there are places where people choose to play or not to play. But ultimately, it's good for companies as well as investors.